Just because a stock is trading at a certain price does not mean you have to pay that price to get it. Hello, my fellow lows, and welcome to Project Booster, where I'm going to share my process of buying 100 shares of Johnson & Johnson at a discount by selling options. Yes, you heard me, options. There's this huge misconception about options. Depending on who you talk to, they're either portrayed as highly speculative and risky or the easiest way to make money. The truth, of course, is somewhere in the middle. They can play a very important role in building a long-term portfolio as long as you manage your risk. So I want to show you how I use them with a real trade and real money from my account. Today, we're going to cover a quick introduction to selling puts, walk through the JNJ trade I did last Friday, compare the process to buying stock, and talk about how I'm going to manage this trade. So let's start with the basics. What the heck is a put option? There are many technical definitions out there, but I like to think of it as the buying and selling of a promise or an obligation. The seller, which is what we're going to be, is selling an obligation to buy a stock at a certain price at a certain date. The buyer of the put option is buying that promise from us, and so they have to pay some premium for us to take that promise and to take on the risk. It's important to remember that every time I talk about a put option here, I'm talking about a cash secured put, which just means that you actually have the money to buy the stock if it comes down to it. Remember that one options contract is equivalent to 100 shares, so you need to multiply the share price by 100. Let's go through a hypothetical example. XYZ stock is trading at $100. Some guy buys it instantly, and while you like the stock, you're not really sure about its value at $100. Now, this guy isn't like us dividend investors. He gets nervous if his stock price drops. So he wants to buy insurance to guarantee he can sell his stock at a certain price if it drops. So if XYZ is trading at $100, he says, okay, I want you to promise to buy my stock for $95 in 2 weeks, and in return, I'll pay you $2 to take this risk. Remember that we do like XYZ stock at $100, and so we will like it even more if we can get it at a cheaper price than $100, which is what the market is offering us right now. So why not take the $2 and see what happens? Of course, there are two possible outcomes. Outcome number one, in 2 weeks, the stock shoots up to say $110. The buyer isn't going to exercise the obligation because he can sell the stock for $110 instead of $95. You keep the $2 and everyone's happy. Alternatively, in 2 weeks, the stock drops to $90. Now he will exercise his obligation and you have to buy the stock for $95. You did collect $2, and so your cost basis is actually $93, which is $7 lower than when you were considering buying the stock at $100 2 weeks ago. Now, I know that was a lot to take in. Feel free to watch this as many times as you need to, and drop me any questions in the comments if I didn't explain anything clearly. Now, let's walk through the situation again, but this time with specific numbers for the Johnson & Johnson trade. On Friday, J&J had a pretty red day, down nearly $5 or 2.76%. It closed at $168.23. This was on the news that the J&J vaccine did not provide as much protection against Omicron, hence the somewhat ironic title of Project Booster. Now, I could absolutely have bought stock right here at nearly a 3% discount, but remember, that isn't the goal. We want to get it even cheaper. Instead, I sold a put option that expires on the 21st of January 2022 at the 165 strike for $2.47 or $247. Remember, it's 100 shares. So now let's revisit the two scenarios. If J&J is above $165, it doesn't make sense for the person on the other side of the trade to make me buy it because they could make more money selling at market prices. If this happens, I keep the $247 and try again. If the stock does drop below $165, the person on the other end of the trade will ask me to make good on my obligation to buy 100 shares of J&J at 165 for a total of $16,500. Don't forget we did collect $247 earlier, so our cost basis is $162.53. We have successfully established a long position in J&J lower than Friday's close. Now let's review how those two situations stack up against each other. Take into account J&J's current annual dividend of $4.24 per share, buying the stock on Friday would have gotten us a dividend yield of 2.5%. In our options trade, the same dividend yields 2.6% due to our lower entry price. Don't forget, we also received the $247 premium, which is more than half the annual dividend, and that's gonna boost our returns as well. Ultimately, we're not trying to beat the market with this premium. We're just trying to buy shares at a discounted amount. If you're already dollar cost averaging into positions or buying a few $100s worth of stocks every month, it may be worth waiting until you have enough capital to buy 100 shares and then sell a put option to get better prices. Speaking of dividends, I recently posted a video showing all my dividend income for 2021. I'll have a link to that in the description below. Now that we've gone through the whole trade, let's talk about how it's going to be managed. If you've been following my weekly portfolio updates, you'll know that I do actively manage my trades to lock in profits and reduce risk. Usually, I set a good till cancelled order to automatically close if a certain price target is met. Typically, I aim to close the position for 50 to 75% of the initial premium collected. In this case, that would mean buying back this option for anywhere between $60 to $120. However, for this trade, because I actually do want to own the stock, I won't be doing anything to adjust the trade unless something drastic happens. I will be reviewing this position as part of the weekly portfolio review, but the current plan is not to touch it until the week of expiration, and that's the week of January 17th to 21st, 2022. That's all I have for this video. I hope you follow along on this journey and see how it turns out. Until next time, take care and invest safely.